Hey traders, checking into the stock market today. Normally we look for a lack of volume and volatility this shortened holiday week, but with the White House reappointing Powell as Fed chair, then in my opinion that added a little bit of volatility to things. So we ended up with a bear close. Been a while since we've seen some solid bear momentum into the end of the day, and the question now is, are we going to see follow through? Let's look at the clues on the charts. So pre-market live stream this morning, this is a rising wedge that I was keeping an eye on. It certainly looked like another bull break was coming, but by the end of the day, we rolled over into the bear break. So daily consolidation is shaping up. Looking at it on SPY, we've got daily support coming into play. The last higher low was 466.34. If that level breaks, we're looking down to 462.04. So we certainly know one day doesn't mean anything, but it's a notable shift for us in a streak where the bulls have had absolute complete control for quite some time now. This does stand out to us, and it may be shaping up for weekly consolidation. We've had a pattern of a higher low every single week, 6 weeks in a row, and if that 466.23 level breaks, that pattern breaks and weekly consolidation will be underway. Hourly time frame, you can see the end of the day dump had significant momentum behind it, and it was due to the financial sector and QQQ. We started the morning with everything strong, everything going up. QQQ rolled over, very notable weakness. One thing that stood out to me, this is the second time this has happened in the last few weeks, 5-minute stair-step pattern, setting a higher low every single candle, and then when that breaks, significant bear follow through to the downside. So that pattern triggered at 408.30. Next thing you know, we're down $7 in a matter of a few hours from that stair-step signal. Again, if you don't know what that is, Google stair-step chart guys, and I go over what that strategy is. But essentially, it's a low-risk, high-reward, top fishing or bottom fishing kind of play. We then saw this big-time flush, a volume climax. At that point in time, I was watching the 1-minute time frame, and I was watching a stair-step pattern to the downside on the 1 minute. Lower high every single 1 minute candle, volume climax shaped up. That marked the low of the day at that point. We then saw a little sideways range that eventually broke bull with solid follow through into the close. And then of course into the close, hourly lower high set, and we rolled over with the confirmed hourly downtrend and solid bear volume behind it. So overall, it's a high volume candle. And again, for holiday Thanksgiving week, it is very unusual to have the highest volume day in weeks on the shortened holiday week. But for QQQ, we're looking at anything above 387.53 as a daily high or low. So the bulls have plenty of space to work with. And what I'm going to be watching for is what's the reaction of first hourly oversold conditions. Back burner bounce. We know often back burner bounces mark daily higher lows into continuation. If we see an hourly oversold bounce from all-time highs, we set a lower high and then drop to a lower low, it's notable to me for a shift in momentum taking place. If it's going to be bulls business as usual, that hourly oversold will mark a daily higher low, and the bulls will take back control from there. So that's something I'm keeping an eye out for over the next couple of days as well. So notable shift, big tech seeing profit taking, Apple all-time highs, that's a big bearish reversal candle after a very significant run over the last few days. Google watching a potential rising wedge on the daily time frame. So big tech led the way to the upside last week, and now seeing some weakness and cooling things off from here. While it was cooling off, the financial sector took over, and the financial sector had a really strong day today. It was up over 2% the majority of the day, and we finally saw hourly consolidation. I was watching this 5-minute rising wedge for hours, waiting for it to try and play out. And it finally did into the close. I had given up on it at that point just because I was bored. But it was a rising wedge that rolled over into hourly consolidation. Why was I looking at a rising wedge? Because we were up over 2% with no hourly consolidation. So I know hourly consolidation is inevitable, and I see a short-term bearish pattern that tells me to keep an eye out for it. And the bears just loved the fact that it was QQQ confirming an hourly downtrend at the same time as XLF started hourly consolidation to lead to that weak close in the broader market. Semiconductors, volume climax, kind of all-time high candle as well. Very similar to QQQ, strong correlation there. Anything above 291.55 is a daily high or low. Same thing. What is the response to first hourly oversold conditions? Does that mark our daily high or low and continued uptrend? Or do we bounce, follow through with a lower low, and show us that a longer term shift is underway? Perhaps weekly consolidation. High or low every week for 6 weeks, just like SPY. Maybe time for a weekly pullback in names that have been extremely strong. XLF, bigger picture. We're scouting a weekly high or low, no longer likely to be a weekly bull flag, but the bulls will have to change the daily trend back in their favor. Anything under 40.36 is a daily lower high. And once this bounce tops out, we have to then set the higher low and higher high. So it's up to the bulls to confirm a daily trend change back in their favor. But again, it's not surprising that we see all last week, big tech, QQQ, SMH, semiconductor strength. XLF, XLE, IWM weakness. Today, XLF, strength, QQQ, and big tech and semiconductor weakness. So they're flipping. It's the rotation game that's going on still. So we're not seeing all of our major sectors dropping to the low of the day at the same time. It's not that kind of fear drop at this point. That's something I'm always watching for, but right now it is still rotation-like in the sense that XLF had a pretty solid day overall. Healthcare, one of the scenarios we were watching for the bears is, are we going to break daily support of 131.90 to set the weekly lower high and start weekly consolidation? And that is on the table. High, higher low, well, not a higher low, but a low set, lower high. And if we see that bear break of 131.90, the weekly equilibrium will be shaping up, and we'll then scout a higher low compared to 124.50, but that would be one of our major sectors joining weekly consolidation follow through with XLF, which has already started it. And now the big question is, does big tech and does QQQ see weekly consolidation as well? IWM started a bounce, but very weak close. IWM bulls are getting a little bit concerned here with this weekly pullback. Yes, we have plenty of space for a weekly higher low compared to 216.76, but this pullback is setting up space for a weekly lower high to be the result of the next bounce. So the growth bull move, it was a nice one, but that momentum is lost now. And we're in a clear daily and hourly downtrend. And the bulls have to regain the hourly trend and then regain the daily trend to set a weekly higher low. So not very comfortable with growth names at this point. Uptrend support line we can keep an eye on as well. Pretty much the EMA 12 here. If we hold weekly EMA 12, bulls will say, all right, we'll take it. If we lose weekly EMA 12, definitely going to be firing off those red flag signals. Biotech sector has been a lead bear for a while, and the broader market weakness today and the growth weakness led to a clear bear break. Double bottom in the 121s. We were shaping up for a potential bounce. I'll look at the short term in just a moment. But now it's about the 118 double bottom, and that is back in play. And we are close to the biotech sector seeing the lowest prices in 2021. That's very notable. Granted, it's only one small sector, but notable weakness. Biotech sector had a solid bounce today off of that low. This volume got my attention. And I said, okay, bear break of 121 support into 5-minute solid bull volume. I'm going to scout a 5-minute higher low. And I didn't make an entry here, but we confirmed a 5-minute trend change. And this is where a lot of people get confused with technical analysis. As soon as you confirm a trend change on one time frame, you zoom out to the longer term time frame. And I recognize if we don't break the high of the day here, it's possible a 15-minute lower high is shaping up. We failed the high of the day by 14 cents or so, then formed a 15-minute tightening range, and then rolled over with weakness with the broader market. So the red flag was confirming a 5-minute trend change, but not breaking the high of the day, because that keeps you range bound and that keeps you forming a 15-minute tightening range rather than following through with trend changes and V-shaped bounces. So just like that, the daily stair-step pattern continues, lower high every single day for the last 12 days in a row. And the bulls only one support level in play for the year of 2021. And that's 118. in play this week. Cannabis names are still extremely weak. They've given back the entirety of this move, and they're looking at the recent lows as the only support levels in play. I personally had both eyes on this sector for the bull bounce, the volume behind it, and I'm now back to paying a lot less attention to this sector. Why? Because it's opportunity cost if I'm spending too much time on it, and we know a daily lower high is the result of the next bounce from here as the most likely scenario, unless there's some kind of significant news catalyst. So I'm not going to keep spending time and money and effort on a very weak sector that had its chance to shift momentum and failed to do so. I will be interested in this sector late summer of 2022 as we head into the voting season, where states will be looking to legalize and put medicinal initiatives through. So I'm not saying we're going to go down for the next 8 months, but I'm not going to constantly bang my head against the wall trying to play counter trend in a sector that's been doing nothing but weakness for the last 7 months. And again, we just have to ask ourselves what happens if the broader market sees monthly consolidation. This sector is going to see fresh lows. So all about 1131 on CGC. If we hold it, we zoom out, we scout a daily lower high, and you better believe the bears are going to be waiting for daily lower highs. And USMJ is the same thing. We gave back 80% plus of this move, tons of space for a daily lower high, and a news catalyst can change things, but I personally do not like trading and hoping for a news catalyst to save my positions. So I am back to one eye on the sector, but not a whole lot of attention unless big time bull volume shows up. Just like the last time it showed up, there was opportunity, lock in some gains, try and let it play out, didn't play out, give a little bit of gains back, moving on. So that is where I stand with the cannabis sector at this point in time. Lower high every day for the last 6 days, 5 days. And again, there are support levels nearby, but that's really it. That's the only thing the bulls can hope for is a bottom fishing play off of recent supports. BKKT, we did get our bounce. I wasn't trading much Friday. I was away from the screen when this bull break took place, unfortunately, but it was a 35% bounce off the low. The point I want to make here is once that move takes place, the move that you're looking for, you have to adjust your trading game plan once it takes place. So in this instance, I was looking for a pattern to break of the lower high every single day. I was looking for a 20% to 40% move easy once that takes place. As soon as that takes place, yes, we can see follow through, but you better be taking some profit off the table because your reason for being in the trade, breaking the pattern of the lower high every day, that's now taking place. And we know a daily lower high is the most likely result of this bounce. And this applies to oversold bounces as well. If I'm playing an oversold bounce, an hourly, 15-minute, 5-minute are oversold, and the bounce starts playing out, now 5-minute, 15-minute, and hourly are no longer oversold. My reason for being in the trade is no longer there. I have to be scaling out some of the position into that. Because again, my reason for being in the trade is no longer the case. So for me, it would have been breaking the pattern of a lower high every day, seeing a 35% bounce, have to exit some position into that. And here we are testing those lows. 1658, currently a double bottom, but we would have to hold 1658 and break 2240 for it to be meaningful. Still going to look for a weekly high or low compared to where we came from, but bulls have a ton of work to do, and just 3 hours of control, certainly not enough. Gold, big red day out there for the metals. So previously I was looking for a re-entry, not a re-entry, adding to my positions in gold and silver. And again, I initiated positions. I forget if it was the 4th or the 5th. It was one of these days. So I'm pretty much break even with where we stand right now. But I am no longer looking to add. Why? Dollar strength. The dollar bulls are in absolute complete control. One thing I needed to see was the dollar rising wedge that was potentially shaping up break bear if I was going to have confidence. And it broke bull. So I have a lot less confidence. This isn't exactly what I was looking at, but some version of this. So dollar strength is one reason. And then over the weekend, doing my homework and making member videos, I looked at the monthly time frame for gold and I thought, well, we can very easily be setting a monthly lower high right now. We are in a monthly downtrend. We have our low, lower high, double bottom. Anything under 1913 make that 1917, is just a monthly lower high. We may trade within this range for another couple months. And with the dollar strong, I am not comfortable adding to metals. I can't go aggressive in the metals unless there's a weak dollar. That's just correlation 101. So silver is the same thing. Silver has more space to work with on the monthly. Anything under 27, make that 28.75 is just a monthly lower high. So really that time frame perspective significantly shifted my game plan and outlook, led by the dollar bull break, to look to these charts and say, well, maybe I'm not as bullish as I thought I was on these metals. And that's where I stand right now. So I'm not going to exit the starter positions I have. I'm fairly comfortable in them. If we drop to lower lows, that's a huge red flag, and I will be back to all cash. But I'm just now in observation mode, and I have to see dollar weakness if I'm going to add to metal positions. Oil, watching this 4-hour falling wedge now. We know the natural gas falling wedge has been a good one to keep an eye on, so having a version of it for oil. And here's the natural gas, 12-hour continuing to play out. Bear break today with zero follow-through, keeps the potential 12-hour falling wedge alive. And watching to see if we get a break before the end of this week. So again, shortened week, no trading Thursday, half a day Friday. But we got volatility. And the question is, can the bears follow through? Looking to see, do we break the lows of today, tomorrow? What are our first oversold bounces? SPY and QQQ both will be hourly oversold backburners coming from all-time highs. Does that mark our daily higher lows, or do hourly oversold bounces result in lower lows, showing us a shift in momentum? So that is where we stand. We have hourly resistances now on many names with the top of the afternoon bounce today. And let's see if that was the highlight of the week and it gets boring from here, or if we see some continued volume and volatility tomorrow. If things slow down, I will slow down my trading. Normally this is a week that I would be taking off, as many traders do, but today's action certainly has me sticking around a bit longer. Hope you're well, do good things, and we will see you tomorrow.